we're showing a chart right now. Money supply in China, growth is near historical lows. The credit impulse is also quite subdued. What tools do you think, what further tools do policymakers have in case they need to level up on supporting this economy?
For example, for China and the U.S., the business cycle is very different. It's the opposite. China is facing, this the bottom side of the business cycle. The slowdown in the economy for the last 3 years, the housing, the bubble has been burst already. So the interest rates have been very low. So I think they are the opposite of this. So that's actually, as you said, the challenge for Fed is even more daunting because they are facing the bottom, the top of the cycle. The U.S. dollar has been strong. The market has been the valuation very high. So and the inflation has been declining, but now it's probably facing resurge again. So for them, to me it's a more difficult challenge. But for China, I believe they will keep the renminbi stable. I don't think China will depreciate the currency as a weapon to counter. So I think for the Chinese policymakers, it's very clear they have further room to cut. And to boost the economy, the housing market. But for the U.S. side, as you say, are facing, Fed is facing a dilemma. Yeah.
So they won't use the currency. In 10 seconds or so, do you think they'll use the Treasury card? Do you think they might end up selling Treasuries?
I don't think so. I don't think so. I think, trade war, it's trade war. Don't spread to the financial war, right? So that's the best for both interests.